Thank you to everyone for joining us for episode 19. I am Mr. Poppy covering for Tom Crown, who is on his way to hosting the panels over at the Decentral event. It's a Web3 event in Texas. If you are in the Texas area, feel free to check it out. I am joined by Mr. and Oz. I normally put some jokes up here, but I got to look at Oz's portfolio earlier and thought that was enough joke for one day. Yeah, you guys didn't see that one. That wasn't in the agenda. All right.
That wasn't in the agenda.
That was a good one.
Good one.
Thank you. So first topic is always our Bitcoin, our favorite grandpa coin. After 9 weeks, I really was just convinced in my head that we were just going to go for 10 because it's such a round number. But guys, we made it. We closed our first green week in over 2 months. Does that mean 100K is coming? Are we going to 100K next?
It's just a trap. Waiting for the next rundown, maybe.
Well, let's wait for 40K before we confirm 100K.
Yeah. I think it's around 35K. A lot of people are looking at, but I have posted a chart. We've posted it. I think I tagged RCC. Some of if you break down the chart at its simplest to its simplest levels, I had marked on there the levels, at least in my opinion, and I know you guys might have different levels, right? But I marked down the levels that the bulls need to flip to see some bullish continuation. I marked the level that the bulls need to hold to keep it from going down more. And it's that simple, right? We're just kind of at this uncomfortable decision point where the macro picture is a little bit uncertain. There's been recently some relief in certain markets. So if you were to look, something we talked about a few times before is that tenuous relationship between the dollar and crypto, and then the dollar itself with other currencies like the euro, and how it all plays together. And so the dollar has shown some weakness, demonstrated some weakness through May. It seems to have found some support where it's at. But in the meantime, that has given markets a little bit of a relief. What do you guys think? Do you think is the dollar going to bounce back up? I kind of get this feeling that it's not done yet.
Well, I don't know. It put in a really impressive run up. I think the highs were around 105 or 106, and the run was really aggressive. And some people saw it coming, but it kind of blindsided most people, and it blindsided most of the major markets too, because stocks and equities, pretty much everything, were down at the same time, while the dollar was just making this huge run, which is kind of unexpected. So, after huge runs, everything has to retrace. We've seen it everywhere. We see it time and time again. You have a really aggressive run and then you retrace. But I think the next few days will really decide what it's going to do, because it's either going to continue up after its little retrace, or it's going to start falling, because the run was kind of too aggressive in my mind. If you're watching it, well, all of the major markets were down maybe 10 or maybe like 5 to 10% every single day. The dollar was putting in the same amount, but in the positive side. So it was very, very fast. So it's not weird to see a retrace here, but it'll be interesting to see whether it wants to continue up or continue falling.
Yeah, I'm kind of hoping that it continues the falling, but it has broken out of the downtrend. It broke out of the downtrend actually about a week ago that it was in, and it's just kind of ranging indecisively a little bit right now. Dropped over 3%. It's climbed back up about 1%. And a lot of this was due to the euro posting a little bit of short-term strength there. We'll see if that continues, if the European Central Bank raises rates or makes any other statements that might lead to the euro rallying. But if you are a Bitcoin bull, you probably want to see the euro gain a little bit more strength and the dollar to get a little bit weaker. The opposite happening would probably not be good. Speaking of Bitcoin, the Bitcoin dominance actually, so over the about the past month, Bitcoin dominance, this is one of those indicators of how much market share Bitcoin has over altcoins. And it's usually also an indicator of where the bull to bear cycle is. Bitcoin dominance has broken out of its downtrend. We talked about this before, and it's confirmed It's now up almost just under 10% in the past month. And that's pretty phenomenal. This is what we want to see. It's not because Bitcoin should be your number one investment, your favorite investment, or whatever. You don't have to be a Bitcoin maxi. You just have to respect its position within the market as basically the backbone of the market. And Bitcoin dominance rising is a healthy thing overall for the market. And I'm pretty happy to see it going up, but I don't think, do you guys think, I don't think it's going to go to previous highs. So like in the end of 2019 was the last big peak, and that was around a little over 70%. The last time we tried to breach 70% then was the end of 2020, December of 2020, which, as you know, was approaching the peak bull market in early 2021. We tapped 70% and we just plummeted from there. We dropped from December. We went from 70% all the way down. 4 months later, we're sitting at like 40%. So I kind of get the feeling we're not going to rally to that kind of level again. I think there's just too many altcoins in the market now.
Yeah, and just to add to that, we were having a conversation earlier on the TA channel, a few of us there, some of the resident people, and a lot of people had their eyes set on the 70 target. And I feel like this is kind of in the same mindset that of the people that view Bitcoin going to 100K. And, whichever mindset you have for that, sure, maybe everyone can agree that it will go to 100K at some point or a crazy high number, but you have to take a step back and see that there's also levels in between there, and 70 is still a hell of a lot away from where we are currently. And the altcoins have matured a lot more, and obviously there are cases like Luna where they just disappear, but those are rare events, and a lot of the altcoins have gained a lot of strength. And while in previous years the altcoins would have just been completely wiped out by now, they'd be 90-95% down, whereas now, while they're only down, well, not only, but they're down like 50 to 60%. It still sounds like a lot, but they're definitely gaining a lot more strength. So those crazy high targets, I don't think they're feasible right now. I think we need to take a step back and look at what's ahead of us.
Yeah, I'm inclined to agree with you on that. I know. I've read it on Twitter. There's a lot of people that feel very differently. There's a lot of people that expect virtually the whole altcoin market to just go to nearly nothing, and a lot of alts could matter or could go that direction. But unlike the last cycle, a lot of these projects are well-funded, well-positioned, providing meaningful services, still transacting millions and millions of dollars a day. Not all of them, right? A lot of them are just junk. But there are projects out there with, a reasonable amount of market share and activity that just aren't going to go anywhere. So it's talking about the USD to the Japanese yen, also worth keeping an eye on. A little known fact before we leave Bitcoin, I had that chart where I was looking at it where Bitcoin spent most of its time this past cycle. So if you look at from January 2021 to now, it spent 40% of its time between 35K and 45K. So for me, that's close to the median, the mean. And out of the time it spent outside of that range, over 75% of it was above, 24% below. I would love to see it return back into that range. It'd be nice if we could at least break above 35K. So next we're going to talk about Binance. I don't know if you guys saw, there was a study that came out. There's always some kind of FUD going on, right? There's a study that came out saying that over $2 billion was laundered through Binance over the past few years. On one hand, it's kind of like, okay. Is anyone surprised? But also people launder money all over the place. Airports, banks. Did they compare it to those? Binance claimed that they were assembling, I love this because it reminds me of some other posts in the space, the most sophisticated cyber forensics team on the planet in response to that. So take that as you will. If you were, right? I feel like they're about to put together some really like high speed CIA kind of stuff. But they'll probably actually
what I find weird about this though is They mark 2 billion like it's significant, but if you look at Binance, its annual exchange volume is now 7.7 trillion. So
Yeah,
2 billion is, I mean, that's nothing, surely, compared
it's
to
not.
that. It's, yeah.
It's like when you see the FBI talk about, hey, we captured this crypto hacker or something, or we're on this case, and it's for like a hack of like $4 million. You're thinking, boy, okay,
It's a big
good
deal for
job.
them, but in the grand scheme of things, look at Luna
Yeah,
last week or the week before, 80 billion, or not 80 billion, like around like 30 or however many billions just wiped off. And
look,
congrats, you caught someone that stole 4 million.
or the North Koreans, they took 600 million from a crypto video game. I mean,
Yeah, there's a lot more
And
money is being taken.
yeah, and guys, let's not forget, if we're talking about laundering money, then the best way to launder money is actual fiat, right? And when we're talking about the US dollar, for example, then we're talking about Binance being accused, however accurate that may or may not be. 2 billion for Binance compared to the global estimated volume of money laundering through the US dollar is 800 billion to 2 trillion per year. So really, I mean, if you take the top end of both of those, 2 billion to 2 trillion, we're off by a few zeros there.
yeah, very true. Let's see. So, in other Binance news, this is one of those things as we drift through this bear market. Pay a lot of attention to the news. Pay a lot of attention to news specifically about chains or types of technologies or projects that you are interested in, because now seeing the projects in the communities and the businesses that are active and building and developing and accessible and communicative, those are going to be the ones who will make it to the next bull market. Those are the ones you want to invest in. If the project you're in has only posted one update in the past week or one update in the past month, you might want to think about skipping town and finding something else to invest in. So Binance has a strategic investment arm, and that group just invested in a non-specific amount. They didn't say how much, but they invested in PancakeSwap. And for those who don't know, this is actually pretty much a no-brainer move. But PancakeSwap is the largest DEX on Binance Smart Chain, which is the Binance Layer 1. Also the second largest Layer 1 smart contract chain in the space behind Ethereum. So I don't. Do you guys ever use Pancake? I remember chasing it like a year ago, chasing it through the bull market, trying to make a little money.
Yeah, Uniswap seemed quite big in like 2021 and around 2022, but recently it's been suffering a lot. So I haven't been using it, but I know it definitely had like that was where you went during 2021 if you didn't want to use a centralized exchange. There's so much money flowing through there.
Yeah. Uniswap is still number one. So in terms of volume, in terms of trading volume, actually put this in here. Uniswap was number one. DYDX is number two, which is a pretty fair service you guys should check out. And PancakeSwap was number three. So that was pretty impressive to me that a BSC centric service is number three in terms of trading volume over the past 24 hours. Pretty cool. Now, do you guys know what the top? Maybe you know this, Mister, but I bet you don't. You are the DeFi guru, though. Do you know what the number one in terms of total value lock, total amount of investment into the protocol? Do you know what the number one project is in the space?
The highest TVL. That's a Curve. Curve.
Close. So Ava. I don't know if I say it as Ava. AAVE.
Aave. Yeah.
Aave. Yeah, they're number one. So they're number one. I kind of skip Maker. I know Maker's technically number two, but Maker's pretty much its sole existence is just to sustain the DAI ecosystem, right? So but it is technically number 2. After that is Curve. And then after that is Sushi Swap. Now, the other interesting thing about Sushi Swap, so most of those kind of started out on Ethereum, but guess how many chains? I'm going to throw this one at Oz. How many chains do you think Sushi Swap is on?
5.
Man, all of them.
You fail so bad.
Oh man.
No, like triple that, man. It's 14. So Sushi Swap is on 14 different chains. I can't even name 14 chains off the top of my head. No way.
Yeah, that's where I was aiming my estimate. It was how many chains I can name.
Yeah. So you can see the list. If you go to DeFi Llama, you can click and just browse the list. And it's interesting. There is a lot of chains. Now, I have some experience, and this is purely by accident. There was this like obscure chain. I don't even remember its name. I've never really seen it mentioned, but it exists, and Sushi Swap's on it, that I accidentally bridged some money to. And there was barely enough liquidity for me to move that like $50 back off of that chain, whatever it was. So just be wary. Some of these chains may promise to be faster, better, but the liquidity might just, not be there to support whatever you're trying to do. I usually try to stick to something in the top 10. If it's a top 10 chain, then you can trust it's going to have enough liquidity.
Yeah, that's a big problem, right? Because it's, especially if you're looking to take advantage of DeFi products, that liquidity is super important, because that liquidity provides you not just the ability to trade with reasonable slippage, but it also is a signal that there's deep enough liquidity into various pools to deliver something, however you want to frame it, as close to what you can call reliable yield. So it's not just about that, throughput on the chain. It's not just about that time to finality or whatever the transaction fees may be. The liquidity is important because it does provide that stability in terms of being able to not just trade again, but also the yield you're going to be able to generate out there. So yeah, it's definitely a do your own research kind of a thing. But that's not to say that, hey, if you get in early to a chain and you set up your yield positions early enough and the chain blows up, that's when, the early movers can benefit, right? So it's kind of, that's the judgment call at that point. Is it a new chain? Is it a low liquidity chain? Do you want to take the gamble on it, or do you need something that's a little bit more stable and reliable? Looking at it from a project perspective, it's definitely more for us a decision that's weighted on stability and reliability over the moonshot chance. So at least that's the way I look at things. So yeah, liquidity is super important on chains, man.
Yeah, a lot of people don't realize how precious liquidity is, even for like Bitcoin whales. There's a reason that they primarily trade Bitcoin, because it just has the most liquidity. But also, it's still difficult. A lot of these whales, when they're doing trades, they trade across multiple exchanges, usually at the same time, to get all of their bids in or to do whatever they're trying to do. And I don't say this because I'm a whale. This is just what I'm told. I wish I was.
One day.
I think I told you guys the only time I was considered a pseudo whale, I bought a lot of bananas back in the day for fun. It was dirt cheap and I just wanted to collect them. And I remember buying and selling, like trading that and watching the chart, the candle actually move with my trades was a lot of fun. Let's see. The airdrop. So I know I told you, Mr. Oz, did you get your Optimism airdrop? You probably didn't even qualify.
No, I didn't qualify. I was really upset because I don't know, I was looking through the requirements for it, and they seem quite like strict. There was a lot you had to qualify for.
Well, you only need to qualify you just need to check one of the boxes. If you meet one of the eligibility requirements, then you get, like, if you check all the boxes, you get more. If you check one, you get just a portion of, what's possible.
Okay.
Yeah. So I do like how Optimism did this. So if you've been in the space for the past year, you've probably gotten a few of these free airdrops. There's been quite a few. SOS was one I remember. Gas, I think, was another. Most of those have tanked considerably. But a lot of projects will do this to get you just to kind of check out the ecosystem. Like, hey, we're going to airdrop this to people that have done something relevant to our project. So we're going to airdrop it and hope you come check it out and maybe stick around. The thing that Optimism did differently was that they kind of scaled it up based on how active you were in the decentralized finance space, in the DeFi space. The more active and the more you participated, for example, in like DAO governance and voting for stuff, for example, you would get more. And I know Mr. is a DeFi, DeFi purist. You probably appreciate that aspect. Yeah, DeFi degen. Yeah, you probably appreciate that though, versus just dropping it to just tons of addresses needlessly. The other thing that they did was they really try to drive you into not just cashing out the airdrop, but to locking it into governance, locking it into what they call delegating. Like you delegate it to someone else who's running a validator or whatever, however it's working for proof of stake. So keeping it in the ecosystem. Now it's not a requirement, and you'll see this. So if you haven't done this, we're going to post the link into Reddit. It's a Twitter thread. I'm not chilling that particular guy. He just did a nice little write-up on how to claim it. We'll post that into the Reddit thread after this during the Q&A, and you can see if you qualify. I think the average claim at the time, based on when we first posted about this, it was like around $1,000 for the average claim. So this was a pretty spicy airdrop. But I do encourage you, especially if you are a believer, supporter of DeFi, or broader scale of Satoshi's vision for the space, maybe not cash it out, maybe lock it in. I would suspect that Optimism is going to be a player in the next bull market. Or if you're not sure, maybe cash out half of it. If you need the money, then you need the money. I'm not going to be the one to tell you not to take profit on something.
Yeah, and I think, Pap, it's worth just kind of clarifying there that if you are looking to cash out, then you can skip the delegation step, right? As you claim your tokens, Optimism will push you through to a step that asks you to delegate your votes. You can just skip that step. If you do delegate, you're not going to have access to that liquid just right away.
I do think it was cool how they gave you the profile. Each person that wanted to be a a validator that you could delegate to, they had a little profile and picture and stuff of them. I thought that was nice. Compared to some of these, like I know when I did this on Cosmos for the first time, and I'm a fan of Cosmos, but it was a little bit more intimidating because there was almost no information on who I'm delegating to, other than just the rates that they would offer me and their percent of uptime, which is important because you don't want them to go offline. You have a chance of not getting any rewards then. Yeah, look into it.
So are you delegating your OP, or are you planning to sell there, Pat?
I did. I'll be honest. I did half and half, only because I'll probably at some point in the bear market pick up some of the layer 2 scaling. I guess we didn't mention that, right? Optimism is a layer 2 scaling solution for Ethereum. I'll probably pick up some bags of those, but I don't trust. I just don't trust these airdrops. Bad experiences from some past ones. So I'm going to hedge that risk. Cashed out half. I'll pick up some more later. Not financial advice.
Fair enough. The thing that you reminded me of the gas drop that I never claimed. It's probably not even worth claiming at this point. But what this reminds me of is Uniswap. The drop initially on the Uni token. There was a lot of selling going on in the early days, and it really tanked the price. But it was really good to see that price recover. And really all that enthusiasm for the Uniswap ecosystem start to kick in. That's kind of how I'm looking at this OP drop is, in terms of selling now, do I wait? The one thing that I think is really interesting is if you look at the price chart on OP, it's actually holding the line pretty good right now, which is really good to see, because at this point during the Uni airdrop back in the day, it was just nothing but down, right? But at this, just looking at the 7-day chart on OP, we're going straight sideways pretty much. So,
Mhm.
you got to imagine a lot of people are dumping their OP. And that's got to mean, I don't know if Oz there has any insight into this, but, for me, the way I read this chart is there's good amount of support. There's a lot of buy support going on for OP right now.
The problem with a lot of DeFi things that I see though is that no matter how good the fundamentals or the tokenomics are, no matter how good the chart looks, the fundamentals and the tokenomics will normally trump it in the long run. So it kind of depends on how good the tokenomics are. I haven't really looked into it that much.
That's fair. That's a really good point.
Yeah, but out of the last cycle, one of the takeaways, unless someone disagrees with me, I think one of the takeaways is that so far there is no such thing as an Ethereum killer. Just like there's no Bitcoin killer, right? Ethereum's definitely going to be around, and we'll see how. When is it? Is it June? Oh, no, is it July or August?
It's soon. No, isn't it June?
Is it?
Yeah, it's this month. I think they're doing the. They did the testnet, I think. Or they're gonna try it. Yeah.
And I mean, if you were to ask Vitalik, I'm sure he'd tell you that ETH 2.0 is the ETH killer.
Yeah, let me just call Vitalik quick. We're buddies. We play League together. I wish. I know he plays World of Warcraft. I've never played. So, yeah, but out of that, I think you want, if not financial advice, right? But if you're looking at some sort of investment strategy for the bear market, one of the ones you could look at is, hey, I think Ethereum's going to have a promising future in future cycles. Maybe I should invest in the ecosystem because there's layer 2 scaling solutions I don't think are going anywhere. Now, I don't know how they're going to evolve in the future. I don't know if it's going to be like best of breed and the weaker ones eventually just kind of fade away. But there's something to be said for kind of piggybacking the market leader, and Ethereum still remains that market leader for layer 1s. And Dopal said, don't forget the Velodrome. I think that was another, Velo was another airdrop that you can get on Optimism chain. So feel free to look for that. You know what, Dopal? I didn't get that. I didn't qualify for that, surprisingly. I did get Optimism, though. So let's talk about Tron. I love that Tron's making headlines in 2022.
Like headlines that are not jokes? That's another chain.
Sorry, I don't mean that to disparage it. Justin Sun, please come and do the podcast with us.
Oh, yeah. Same here. Right.
USDD, so their stable coin. I actually mad respect for them doing this, and I've seen a few other projects pivot since Luna's collapse. They changed their operating model just to kind of mitigate some of the risk that they identified due to having some similarities to Terra's UST. So I don't know if you guys heard about this. It was originally created to be an algo stablecoin, basically, as far as I understand, basically the exact same as UST. But now it is over collateralized, and they claimed a ratio of 200 over collateralized to the tune of 226%. And then Justin Sun himself even said, congratulations on that. A total of $1.37 billion in asset are backing $667 million in USDD that are in circulation. That is pretty darn over collateralized.
But hold up. What's the asset?
Okay, well, you're right. Part of the asset is the actual TRX, the Tron tokens. So I guess there is some risk there. I don't know the degree to which it is backed by Tron, though, versus Bitcoin versus other things. I'd have to look that up.
Yeah, because that's what worries me, right? Like you can say it's 500x over collateralized if it's 450x of that is the native token. Yeah, that would worry me a little bit.
Yeah, so looking at this, it looks like it's backed with a combination of Bitcoin, Tether, and Tron. And let me see if I have the breakdown. Oh, yeah, here. So it's 14,000 Bitcoins. That's about 440 million in Bitcoin. another 240 million in Tether, and the least is Tron, about 160 million in Tron. So not the worst.
That's not bad. That's not bad.
Yeah, I guess I could live with that. So yeah, kudos to them for thinking about it, but also, you know, I mean, I'm sure there's some selfish aspect to that where they want to keep in business, but I mean, that's how the space evolves. We do fall, we stumble. It's a pretty new and emerging market, industry, technology, but we adapt quickly. Now, imagine if something like this happened to you know, like the 2008 financial crisis. How many years did it take for governments and banks and corporations to adapt to that? A lot longer than crypto, I'm sure.
Yeah, definitely. You know, after reading about this a little bit, probably should research this a little bit more. That's an interesting model that they're over collateralizing a decentralized stablecoin, and that the overwhelming majority of their backing, their reserves are diversified, is actually kind of cool. So, okay, can I just take back my snark at the top of this segment? I'd just like to rescind that officially. Yeah, sorry, Justin.
we could edit it out, but I can't edit the recording on Reddit, so you'll be forever enshrined as Shading Justin Sun. You're gonna have to change your name, sir. I'm sorry.
Okay.
You can't be Mr. anymore.
Mr. Mrs.
So Gala Games. I know Oz. This is you. I know you had invested some in Gala Games. They are rolling out a battle royale game this year. And for those who don't remember, Steam actually banned Web3 games or anything with NFTs or crypto hooks of some sort. They banned those late last year, which I think is ridiculous. But Epic Games, the people who own Fortnite, said not a problem. Come sell your games here. So it's going to be a free-to-play online multiplayer, and you're going to be able to use NFT assets in the game that you can trade, you can use in game. Which none of this is new or unique, right? But it is cool that it's going to be built on the Unreal Engine. It's going to be hosted on an actual like gaming storefront for video games, and it potentially could look like some fun. I think we're finally starting to get to that era where we see fun to play video games that people might just want to play without just grinding it out for a salary. You know, maybe we should try this, guys. You know, set up a podcast test event for Grit. It's called Grit.
Yeah, I'm just looking at the website now, and it looks actually quite cool. Kind of looks similar to like a Red Dead Redemption style online game. And this is really interesting because usually the blockchain games, they design the tokenomics and the pay-to-earn elements first, and then they kind of work out how to implement a game around it, or at least that's how it feels when you're playing it, because they focus so much on actually like earning through playing. Like Axie Infinity, they had that problem at the start. Nobody was playing it for fun. They're playing it because you could rake in money. Whereas this game actually looks like it has some depth to it. It looks nice. It looks enjoyable, and I'm presuming it's not pay to earn because none of the other Gala games are, or at least not extremely pay to earn. So kind of cool to see.
I hope it's not like a gacha. I've played too many gacha games that are just extremely painful. What did someone say for the new Blizzard? I think it's the new Diablo.
No, I haven't played that.
Yeah, no, I've been off Diablo for a minute.
Yeah, it's the new mobile game. I'm gonna find it here, but I think it was something like $100,000 you'd have to spend, or 10 years playing to get to the end game of it. So,
wow.
Yeah, think about that for a minute. But that's kind of the terrible state of a lot of these mobile games. And I look at stuff like that and I think, why are people so averse? Why are gamers so averse to NFTs. I really just think it's a misunderstanding and a lot of FUD. I will respect the opinions, a little bit to some degree that it's true, the environmental concerns, but with Ethereum going to proof of stake and with a lot of these other layer ones already being proof of stake, I think it's a bit of a non-issue as well. So I think it's only a matter of time. Really, it just makes
happy. It's an interesting point you're making right there about misunderstanding. Because funnily enough, I had a conversation with a fairly big guy within the gaming space. He's worked for quite a few big gaming companies in the past, and we had for my company, it's a Web3 company, and we had the opportunity to speak to him, and like we talked about gaming a lot. That was one of the main focuses, and he's saying about the concerns about it and about the misunderstanding is that people, like the gamers, don't want it, which is a weird thing to think, because gamers are spending so much money and they're dedicating so much time to these games, and yet they earn something, but they don't, because the second they log out or they lose access to account, what is it worth? Whereas if with the blockchain games, it's all recorded there, it's all provable, and if you earn something, then it could be recorded on the blockchain, and it's always going to be yours. So there's definitely pros and cons to putting games onto the blockchain. It's just a complete misunderstanding about what those pros actually are.
So what is that misunderstanding? Did you guys talk about that at all, as far as like any insight from this guy you were talking to? Does he have any thoughts on why the pushback, why the hesitation for NFT adoption?
He's along the lines that NFTs are kind of like not a bubble, but it's just they haven't really found their real purpose yet. So he's fairly anti-crypto in some sense. I don't want to say too much because he's a very lovely guy and he's very intelligent, but he's fairly anti-NFT and cryptos at the moment in its current stage, and he didn't really elaborate why. And some of the things he thought were cons weren't actually cons. There's a lot of, because in the news they only focus on the big events, right? Like the hacks, the exploits. That's all they talk about because those are the big news events. But in reality, while it may seem like it happens all the time in crypto, it's really, you can either predict it happening or, then they're not huge things, right? Like it's not every day you lose 300 million pounds, right? That's just, they happen sometimes because it's some immature technology, but over time it'll improve. And I feel that's kind of where all the FUD stems from, is because the news only focuses on the extremes because, well, they're news. That's what they do. So, yeah, I feel like that's where most of the misunderstanding comes from, is actually just they're only seeing the bad side because it's such an immature technology currently in its current stages that they're not actually able to focus on the good side yet.
Interesting. Okay, yeah, that's actually really good insight. And on top of that, any kind of change to a world that you may be used to for decades is it's going to take some time, right, to get used to these ideas.
Best move is subtle changes over time, ease their way into it. I feel like.
Yeah, I think it just feels like such an inevitability to me. The integration, at least on some levels, just strictly improves your gaming experience. And we always go back to my favorite example, which is if I could trade my League of Legends skins and trade them like NFTs, boom. I can't see a drawback because they're not tradable now. It's not like I can sell them back to Riot Games. So Riot's not going to gain or lose, revenue. It doesn't matter to them at that point. They could put, like a lot of NFTs, they could say the creator gets a 1% cut of any future trades. So if anything, it's a new revenue source. And then, of course, as a gamer, I gain the benefit of being able to sell the stuff that I don't use anymore. I definitely have some skins that I've reconsidered, over the years, like the Teemo Ladybug skin. I don't know about that one anymore. I used to love it. And you guys don't play League, you don't get it.
No,
all right.
Sorry.
Sadly, no. I like exciting games.
Oh snap! Oh
Man.
you're gonna make a lot of people angry with that one, Oz. Oh man.
Oh, yeah,
Crypto
yeah.
hates me.
Yeah, why don't you just come out and say Dota's better? Now no one's going to listen to us anymore. Except the 3 people that play Dota. Oh.
Shots fired.
Hey, tell me if you've heard this story before. Bored apes get hacked. So
I have.
yeah,
Again?
so their Discord got hacked again. A bunch of apes and Ethereum and other stuff got stolen again. But here's the thing here's where I sit on it. So when the Bored Apes Discord gets hacked, there was actually a tweet from one of the co-founders, something along the lines of blaming it on Discord, saying it's not a great place for Web3. So when their Discord gets hacked repeatedly, when stuff gets stolen repeatedly, blame Discord. Okay. When the Bored Ape Mint turned into a hot mess, gas war, millions of dollars lost on wasted gas, blame Ethereum. What if you guys just planned it a little bit better? Improve the security, plan your mints, your launches better. It seems like they're getting really good at blaming other people for these issues, right? Mad respect to the apes, but I wouldn't be blaming Discord for this one. I don't see how. Discord actually has some pretty spicy security settings. I
was going to say, did they say what the exploit was? Did the guy's account get compromised?
I think in most of these cases, I'm not going to say for sure because I haven't followed it in detail, but in a lot of these cases, it's usually like one account or a bot that has elevated privileges, and if it's either social engineering or the bot has a vulnerability, if it's a bot, either way, that gets them access, and then they'll usually do something like post a fake mint link, or something like that, and then people click on it and lose stuff. So I've seen that in other communities, but it comes down to human error. If the human clicks on the email or clicks on the message or clicks on something they shouldn't, which you can mitigate. Education is important. Understanding your own security, cybersecurity, security online is important. Or also just keeping tabs on the bots you use and try to minimize the numbers and types of bots and the level of access that they have is important.
I have a question. How is I'm not so super plugged into the Bake ecosystem or the community. How is the community taking this? Are they siding with the co-founder and blaming Discord on this exploit, or?
No, I've seen a mix of opinions. Just like when they had the Mint go sideways and Yuga team suggested making their own chain for apes. It seems like while there are supporters of that idea, that slightly more supporters of just remaining on Ethereum, and just like the same thing. I mean, it's crypto, so it's divisive. No matter what you say, someone will disagree with it.
Yeah, I think that's interesting, and I tend to side with you on that one, Pap. It's you can only push the blame along so far with as much funding as this community has, and all the eyes on it, and really just the value of the NFTs that are inside that community. It really shouldn't be that hard to have better security practices in place. And what pops into my brain is, I think if Bake is considering launching their own L1, their own chain, that's a super cool idea. But if they can't even secure their Discord, I'm not so sure I'd be comfortable using a Bake blockchain.
Yeah. Well,
it's a little bit more complicated than a Discord security protocol.
It's true. And you got to be really careful. So I've been in a few Discords when these kind of fake mint links pop in, and they can be very convincing because these guys are pretty smart. They'll wait until there's an event coming and people are waiting, and they don't always publicize the exact time and place of a mint, right? They'll say like, hey, sometime today or this week. And so that's a very, very tricky. Two, I as careful as I am, I almost clicked on one on Twitter this week. So you can't take the web links that you see. So like this one was for Goblin Town, right? and we're going to talk about Goblin Town a little bit. But Goblin Town, the NFT project, they had a mint that started a few days ago where you can make a McGoblin burger. They knew that this was coming on a certain day. And so some scammers they made a fake copy of the entire Goblin website. And then they would post the link up under official posts on Twitter. And it was the correct URL when you looked at it, but that's because they masked the actual address. It looks right when you look at it. You click on it, it goes to a different website. And you need to be careful about what you click on. So look at the URL before you click on it, and definitely before you click your wallet address. And that's what I saw. They had swapped one letter in the URL, and I caught it before I connected my wallet. So anyways, that was a close encounter. I mean, no matter how careful you are, these guys are just everywhere. So yeah. One little bit of news about the Bored Apes before we go to the next one. Snoop Dogg's opening a Bored Ape themed restaurant called Dr. Bombay's Sweet Exploration. I think it's dessert themed. Yeah, he's
amazing.
Big. I mean, we know Snoop is big into NFTs. He does a lot in NFTs.
He's
but
in
he
the
does
too. It's like Sandbox.
Yeah. He was
the name of.
Yeah, he's everywhere. It's funny. He's more active in Web3 than most people. So yeah, I don't know where that's going to be at. I think it might be LA. So I'm curious. Might have to check that out. Actually, Mister, I think you're on the West Coast. That might be a job for you.
Mr. is currently not here.
There. Yeah. So little known fact, Mister's place got flooded. So where he lives, they had some flooding. The flooding's receded, so he's safe. But he's technically not allowed to be in his house right now. So I think he was trying to record for us before he got kicked out by the crews cleaning stuff up or something. The firemen, I don't know. So this is important. If you're from New York, especially, the New York legislature is trying to ban Bitcoin mining. They've already pushed it up to the governor, and the governor alone at this point will determine the fate of this legislation. So if you're in New York, you may want to, contact her office and let them know how you feel. This would create a 2-year ban on Bitcoin mining, and she has 10 days to sign it or to veto it. But I think this is going to probably drive a lot of mining out of New York, that, whatever remains there. And I know Texas has been courting a lot of miners. I wouldn't be surprised to see more miners moving there.
Well, that's what I was just about to say, is that I don't think this is the right step to make, because it's just going to drive away money from New York. Because, the mining software, the hardware, you can't, you can resell it. It's a little bit difficult because the amount that the mining companies have. So they're just going to move it. That's what happened when they got banned from China. They just moved to America, or I think it was a few other European countries. They just moved their equipment. So all of this is really going to do is just move money away from New York, and they're just going to move elsewhere. I think there's so many things they could have done better here. Like they could have brought in initiatives to make it more green, or they could have just done so many things better without affecting how much money New York is going to be bringing in.
Yeah, well, I won't pretend to understand the whole issue, but I do know that having a city like New York City there's a huge demand on the power grid already. So I don't know if that's a factor that they're worried about. A growing presence could lead to competition with the city for power. Not really sure, but I do know that Texas has its own independent power grid, at least to some degree, and that gives it a little bit more flexibility in terms of how it courts things like miners, who obviously run very power intensive hardware. So honestly, what's that?
With Texas, what they did to get around this is because to begin with, they had the same concern about New York. where over time they're just going to ramp up the stress on the electricity network, the grid. So what they did is they went around to all the mining companies that were moving, and the power companies did. I think it was the power companies that did this. They went around and they made them sign agreements to either power down or at least limit how much power they're drawing during times of stress. So all the energy company would have to do is contact them and be like, okay, there's a ton of stress, or maybe they even automated it. I have no idea the lengths they went to, but basically whenever there's a huge amount of stress, they just power down and stop stressing the grid, which is a really good idea because it doesn't drive away money from Texas, and it doesn't create too much stress on the grid because when it's overwhelmed, all they have to do is turn it off. So I don't know.
That's kind of cool.
It's a smart idea, and it doesn't really punish anybody. It's more all-round positives in that situation.
Mm-hmm. Well, in the miners are financially incentivized to find the most, and Tom talked about this in the last episode, financially incentivized to find the most cost-effective power supply, and in things like some of the green technologies are even better because let's say you retrofit a hydroelectric dam. I know that there was a small one. I think it was when I lived in Georgia. There was a small one that they were looking to retrofit to do Bitcoin mining. And other than maintaining the facility, I mean, that's basically free power at that point, and free money. So, yeah, but I get that proof of work is going to continue to remain a very divisive topic. It seems to be one of the top ones besides just the financial risk and stability of the ecosystem, the environmental implications. And it'll be interesting to see how that evolves in the coming years, especially with people like Elon Musk, right? He's kind of at the forefront of alternative energy sources, or at least alternative vehicle energy sources. So maybe he'll think of something clever.
Yeah, it'd be interesting to see his opinion on it as well, because it's times like these where he kind of creates a solution. It's a little bit of a silly comparison, but when Ukraine was struggling to power stuff, he sent over a bunch of the solar panels, and it was a solution that worked for them. And you know, it's not too far-fetched to think that Elon Musk could do a similar thing for miners or for people that need all these resources, because the technology he's doing, he is at the forefront, and he has a big team, and it's kind of a two-way relationship because he makes a bunch of money out of it. They need a solution. It's not going to get it banned, and I feel he's also concerned about the effects it has on the environment, because that was his one of the reasons for his selling, I believe. I think that's one of the reasons he cited, or at least when he tested the liquidity, he was concerned about the environmental consequences of Bitcoin mining, or just something along those lines. So, you know, there are solutions. There are solutions. It's just people need to really enhance those solutions and make them better for everyone. Because, like you said, it's in the best interest of the miners to get the most cost-effective and the most like green or efficient power source. Because, you know, if they don't, it eats into their profits. So I think that's something that legislators also need to realize as well, is that, you know, they want the same thing. They want cheap and efficient energy. And that's also what the legislators want. They don't want them eating up all the energy or affecting the environment. So
okay, so I think we should clarify. I'll be honest, I didn't get onto Reddit today. I had updated this yesterday. So one of the posts from you, Cohorst, actually talks about clarifying the language of this bill. And, you know, you can reference the link. It's one of the top posts in there right now. I'm not the expert. I didn't read the bill. But basically it says that, to summarize, that all this means is that large crypto mining firms cannot reactivate old power plants to power the mining farms, and that they're not issuing permits to open carbon-based power plants that feed directly into mining farms. And that's still a major impact. Obviously, carbon-based, like coal, for example, there's probably a ton of those that they could use, but you can still build a farm hook into the existing grid if it's hydro, solar, wind, or something else. So just to clarify, a little bit there. But obviously still restrictions on Bitcoin mining. New York State is not known for being a very friendly crypto state as is. So I think that just kind of adds to that image.
Oh, that's interesting. I didn't know that. That's my bad.
Well, yeah, but there's still an impact, right? But I'm a fan of not seeing coal power plants used for sure. Those are just
make it as
nasty.
green as possible.
Mm.
There's a reason they're shut down.
Yeah. So let's talk about this. This is actually all right. So let's preface this by saying we don't chill here, but we do talk about new and interesting things in the space. We do talk about trends. We do talk about considerations for investing, right? We talk about these things, but there's never a case where I think anything we say here should be treated as, oh, these guys know better than me, because we're probably really stupid and honestly just terrible investors. So we just love the space. Don't buy because we say something. However, goblins. Now we talked about Goblin Town the last episode, and boy, did that thing blow up. If you're in the NFT space, we talked about this mysterious protocol, this mysterious NFT project that just kind of came out of nowhere. No Discord still, no Discord, no roadmap. The team's anonymous unless you count the goblin pictures that they put up of the team, which are pretty funny. And they just kind of took over NFTs for the past couple weeks. They were trending pretty much every day for the past couple weeks. I think they peaked around 9 ETH. They're currently sitting around 6 ETH floor. And they just had a drop, which this was really clever. I don't know if you saw this, Oz. So the drop, so you have the goblin, and each goblin can go and order a McGoblin burger. But you don't just go and mint this burger. You actually pick all of your ingredients, and then that's your custom burger. And I think there's hundreds or maybe thousands of variants for this. It's interesting. It's interesting. So on one hand, if you did look into this because we talked about it and you independently decided that this was worth your investing, congratulations, because you probably made some good money on that. I'm going to put this up here alongside some of our other wins when we talked about Catcoin. That was a good one. NFT Worlds. That was a good one at the time. I don't know. Did we have others? There's probably others.
I mean, a lot of stuff we've talked about. It's been pretty good. Been on the ball a few times, especially you. I mean, you're on NFT Worlds and Goblins. You've had some pretty good luck with NFTs recently. Yeah,
but call it luck. Call it luck.
Of course.
We're not going to say any of this is financial advice, because it's not. There's probably some stuff we've talked about that just tanked too. So before we go into the Q&A, let's talk about our other favorite layer one chain. Another. Tell me if you heard this before. A layer one goes offline for hours and hours. Oz, what am I talking about?
Obviously Solana. And before you continue, I just want to add one interesting fact. They go offline at least once a month. At least once a month, they have some major outage for a major layer one. Like, that's crazy.
On one, So I think the last one, according to what I saw, was on May 1st. So that would have been just barely in May. So this is the interesting thing, though. If you look at the semantics, if you look to see what people are talking about on social media, like Twitter, like Reddit, Solana is always up there in, I don't know, the top 5, 10, somewhere in there. It's always one of the top ones that people are talking about. It's wild. Despite these issues, people love it. And this is the same thing I say about Cardano. It seems to be pretty divisive. Like, there's people out there that just love to FUD, that love to make fun of Cardano. It took too long to launch, and Charles is a really interesting but divisive guy, and whatever it is, like, there's just a lot that people have to say about it. I think it's the same thing for Solana. Now, I do think there's valid criticisms of Solana because it does go out a lot more than I'm comfortable for what's supposed to be a decentralized chain. But if you're thinking about investment targets, factor this into your decisions, which is, what are people talking about? What are people excited about? What are they going to invest their time and money and energy into? And what communities are going to be around when the market turns? All right. That is probably what Solana is. I'm not saying go buy a bunch, but Oz, I'll probably pick up a little bit. I feel a little bit dirty doing it because is a supporter and believer in the long-term vision of DeFi. I don't think it's right that the chain can go down like that, but on the other hand, I could use the money. And
yeah, and the thing is, that's a fair point. But another thing you have to think about as well is that they also probably don't like the fact it goes down a lot. I mean, obviously they didn't intend for it to go down a lot, and I don't know. It's just something about it. They have all the right passion for it, and they have the right ideas, or maybe not all the right ideas, but some of the ideas are good. But they need to polish the technology before I can feel comfortable investing with it. Because at the end of the day, what are we investing in? We're not investing in, brick and mortar, big companies with hundreds of years of data behind them. We're investing in the technology and how easy it is to use it, or sometimes the community. With Solana, they have the community and they have the hype, and they have some very, very good ideas that could definitely change the space. But they just need to get this technology unlocked because it's meant to be decentralized. The whole point of decentralization is that it doesn't switch off, and it happens all too much, really. So, yeah, I don't know. I mean, yeah, soon enough, I'll probably pick up some too, because you just can't ignore some stuff sometimes, and it might not be the most comfortable investment, but they have good ideas and they have community, and it's like the same with Cardano. They have very good ideas and they have the community. They just don't have the tech to realize it yet. So, yeah, like you said, it's really interesting.
Yeah, it is. There's a lot of positive energy floating around the Sol space. I think the biggest gripe I have was all the VC venture capitalist influence over the chain, the dumping, the video that leaked of them basically laughing about dumping on investors. That was pretty bad. But the fact that people stuck around anyways, that makes me kind of bullish on it. From an investment perspective.
Ignore these stuff and get over it, which is good.
Yeah.